People are just keep coming in. Um, okay, thank you all for joining. And to whoever is panicking about your long-term portfolio and your retirement accounts, I would say don't panic and definitely don't sell at a loss today. That's like the worst thing to do. Um, And first, I want to show you all this graph of SPY. And SPY is one of it's an ETF, it's a broad market ETF that has most of the large cap stocks. So it's a good representation of the market. And it's a really old ETF. It's been around since 1997 and it's gone through many downturns. And as you can see, today is also just a downturn. But you really have to, and in the long run, downturns are the best times to invest. But then when we look at the geopolitical scenario now, you don't know if this dip is the lowest it can go to in this time period. It's probably not. But what will happen or what can happen is it dips today. There might be a slight recovery and then it might dip again in like today's scenario. I mean, like right now, after today's giant fall, it's possible that we might see a recovery in a few days. And I'm going to spend a lot of this seminar talking about what's happening, what are the possible scenarios, and then I'll take questions. So why is this happening? This is because of blanket tariffs against most of the countries in the world. I think the four countries that were spared were Belarus, Russia, uh, Hungary, and North Korea. Everybody else got tariffed. And really, what is happening is um, that this administration sort of expects countries to come up and negotiate and ask, and then when they negotiate, they might remove tariffs against certain countries. So the market really fell today because instead of negotiating or capitulating, China hit back strongly with tariffs of their own. And that is what has caused today's sinking. Now, the world is also sort of waiting to see what the European Union will do, because if they come back with retaliatory tariffs of their own, then the market will sink even more. And of course, what is needed for market recovery is a lifting of the tariffs. And there are other things complicating the picture as well. If you all don't know, um, there are people in Congress trying to pass. They're right now creating the bills, and it's a bipartisan effort to take away tariff power, at least with Canada and Mexico, um, from Trump. And if they succeed in doing this, and it would have to be like a veto-proof majority, then the power to start these trade wars is sort of hampered a bit. And then right now, the point is that there are so many factors in play that we cannot predict how anything is going to go. If the trade wars ease up, the market will like really recover really strongly. And if it doesn't, but it doesn't get worse, you might see some slight recovery. So all of this, so in all this, the strategy to employ is sometimes buy the dip and sell the quick recovery, which is something that you can try and which I'm trying with some of the stocks that I really like. But then you also risk that there might be no quick recovery in the next few days. it is 100% a possibility, and then that you might get continuing panic for a number of days before the market sees its bottom, and then you see some recovery. So you really have to be prepared, and you also have to be prepared to play all choices. I'm going to stop now to take some questions.
Hey Jaya, which one have you picked for this? Which stocks did you actually pick during this low
I mean, I picked
trend?
some ones like that I know can
Mm-hmm.
like that I've seen recover quickly
Mm-hmm.
when the market turns green. And
Okay.
one of these is TEM, which is Tempest AI, which is a
Mm-hmm.
medical
Right. Yeah.
device stock, which I think many in the Discord have been playing, and we've made
Yes.
a
Yeah.
nice profit off it in the past few weeks. Another one I like is RKLB. You really,
Mm-hmm.
I mean, like right now, every stock in the market is most of the stocks are in the market are down. I'm also buying some Intel. Um,
Okay.
because and then I mean I'm waiting. I'm also picking up dividend ETFs, and this I've shared with the Discord which ones I like.
Right.
Um,
Okay.
so all of this is really you sort of buy the dip and maybe sell the recovery because there might be a bigger dip again. And again,
Right.
that bigger dip is 100% possible. And the other thing to consider is that if the tariffs are not let up, if they're continued and the world really gets into an all-out trade war, you're looking at not just a recession or even maybe a depression. In America, you're looking at it everywhere in the world. I mean, like right now, tariffs affect so many small businesses, so many small business owners all around the world are just like waking up to realize, hey, my business model is no longer viable. And I no longer, if this continues, I no longer have something that will work. So it's a scary thing for many, many people. And I really hope that we don't get into an all out trade war,
Mm-hmm.
but it's not something that you can take off the table. You also know that many people do not want this, even in this administration's inner circle. There are many, many people who do not want this.
Right.
So, what influence they will have, and if stuff plays out according to this admin's expectations, they really expect negotiations. They're hoping for negotiations. They're hoping for capitulation from other countries, but other countries may not give it to them. So when
Got
they don't give it to them and he does not back down, then you've got your full out trade war. But they might not give it to him and he might back down. That's one possibility that might like develop, or that they actually, I mean, I don't think countries like China will capitulate. And I don't know what the EU will do. Really, all eyes are on the EU now. And I think Canada has been like sort of holding strong. And with Canada, you've got like Congress trying to step in. So there's just so many possibilities in the air that you cannot predict anything. It's impossible to predict. But long term, everything recovers. Even if we, let's assume that you buy something today, you might have a chance to like sell it for a quick recovery. And this is the swing trading strategy we've discussed plenty in the Discord, and people have been making money off it. So swing trading works as a strategy in situations like this. You might have to hold for like a few days or weeks even for this panic, the current panic to like ease up, and you might have to buy at even lower points. Like you buy 10 today, it's down to like I think 42. You might get it in the 30s in a few more days if the downward trend continues. But the minute the market shows any sign of easing up, you'll see quick recovery in stocks like that. And then, of course, you'll have some ability to profit take before the next crazy thing happens to crater the market again. That's just how you play it. And that's how
Got
I've
it.
been
Yeah.
playing it for like several weeks now. You just like buy the dip, sell the recovery, buy the dip again, sell the recovery. That's just what you keep doing. And then, of course, I've talked about tax strategies in the fundamentals class. You have to like keep all of that in mind too. So all in all, there's a great deal of learning to play these games. If you don't have this learning, don't play these games. If you don't have the back, what you can do then is just buy a little dip, buy a little at whatever dips you see, and just ride it out for years. And of course, in that strategy, you'd be buying ETFs and like blue chip stocks like Google and like big companies that you hope that will survive forever. But I mean, at at the end of the day, if you don't have the training, if you don't have the knowledge, don't play more dangerous games. And swing trading absolutely is a bit more of a dangerous game.
True.
But
Yeah.
so, any more questions?
Hey Jaya, this is Sahiti.
Hmm?
So, are there any particular call options that we can invest into right now?
Oh my God. I mean, I don't play puts and calls. I mean, right now, you can think that stocks will recover, but when they
Mm,
will, I mean, recover is not something. I mean, like you can look at the quick recovery stocks,
mm,
like the stocks that you expect to make a quick recovery when the market recovers, and then go with call options for those for like a later date. But that's gambling. I really
uh,
hate options. So, which is
okay.
why I'd rather just buy and sell stocks because I know that whatever is down is very likely to go up at some point in the future. Whereas, so even if you have to hold on to it at a loss for a while, you'll eventually see profit. Whereas with a
Yeah.
put or a call, if you miss your date, then your money is just gone.
Yep. Correct. So, yeah, I was like basically looking into some long-term call options, like that ends up
But
like in another 2 years or something.
that's very dangerous because you don't know how long the
Mm-hmm.
situation will
Correct.
last, and you
Yes.
don't
Yes. I
know.
agree with you.
And I mean, like if the situation resolves in 1.5 years versus
Oh my God.
yeah, or like 2.5 years versus 2 years. Again, you really
Mm,
don't know, and you don't know. I mean, I
mm,
feel like this is the most geopolitical and
mm,
economic uncertainty anyone has faced in a while. It's
yeah.
like really chaos is the only thing in play. So when chaos is in play like this, and there's so many variables, and I mean, when I trade the way I do with the amount of information that I share with my Discord, and I just like, we're looking at everything constantly. We're looking at schedules when people talk. We're looking at economic events. We're looking at so many different things. And you really have to like watch everything and try to predict. Like we knew that this was coming. We even had like hedged like a volatility ETF and we made like good money. But again, I would not recommend that volatility ETF to people who don't know what they're doing. But we've made like hundreds of dollars off it in the past few days because we knew this was coming and
Mm,
because we knew what to do. So again, when you whatever you do now, you either make more intricate moves with a lot of knowledge, or you just sit on the sidelines, buy ETFs steadily on all the big drop days, and just wait it out in the long run. But don't
mm.
make big, complicated moves without knowledge, would be my recommendation.
Okay. Thank you. Thanks, Jaya. And one last question from my side. So my entire portfolio is like almost 30% down now. Like, so I am basically, I invested into ETFs only, like JEPQ and couple of like stocks like SoFi something. But the entire portfolio is like almost 30% down. So yeah, I'm getting like I'm like a little
Don't
panic now,
sell.
but yeah, I just don't want,
Don't sell.
yeah,
I
I
mean,
just
like,
don't want to sell it right now.
I
So
mean, this is the
that's the
time
good
that I'm
thing to do,
actually
right?
looking at picking up stuff. I'm not sure
Mm,
because JPQ is on my list, but I might probably want to wait for like a bigger panic day to buy it. Um, because I mean, that's the one that it pays well, but it's also super, super volatile. So, which is why
okay.
in any market correction, it falls the hardest.
Oh, the JPQ?
Yeah, I mean,
Okay.
JPY is like a lot more stable. So, which is why
Mm,
I mean, like, if I had JPQ in my portfolio, I would have sold it like a while ago because I mean, I've already did this. I mean, in anticipation of these drops, I had SPY. bought, I think August 20, I bought it in, go to the let's go to the 6 month view. So let's go to the 1 year view. So I bought a SPY on August 5th. And I knew this was coming. So I also like told my Discord. We sold it. I mean, I sold it in December. And I got like a nice, I think I sold it close to 600. So I made this profit and I did not buy again. And again, like timing and knowledge is what you really need. And you really need to, I mean, I've been expecting this drop
Mm-hmm.
for a really long time because I make a habit of understanding what is happening in the geopolitical scene. And you really need to
Yeah,
play the
correct.
stock market. So, I mean, I bought whatever SPY I bought on this date, I sold around here and I made a nice profit. Not buying again until I see a much bigger drop. I mean, and I am looking to pick up broad market ETFs.
Mm-hmm.
I may not go for SPY, I might go for another one, but I'm looking to buy, but I'm also waiting for the biggest dip. And I mean, this part, like waiting for the biggest dip, is sort of a dangerous game because you never know what day is going to be the biggest dip.
That's
I do
correct.
feel we have not seen it yet. But again, like the market's often like a series of like sharp panics, recovery, sharp panics, recovery. So after it recovers and it goes down in another sharp panic because of something else, and there's so many things, you may see lows close to this point. I don't know if you'll see lows much lower than this point. You see really big lows when you've got a series of days where the market just keeps dropping every consecutive day.
Yeah.
It really doesn't have like the chance to go up, or it just stays steady, doesn't drop further, but then 5 days later it'll drop again. So I don't, so if like, so we continue like that with no chance for recovery, you might see rates much lower than these, prices
Yeah.
much lower. But
Yeah.
if we recover and then we sink again, then you might see things closer to this. It all depends on how much of a consecutive drop the market has, and that really depends on like geopolitical events. And right now it's not just economic uncertainty, we're also looking at potential wars breaking out or like military excursions, which may cause the price to, I mean, the market to panic even more. And you don't know how they're going to be juxtaposed with each other. You don't know if like 5 days later there's going to be military excursions that might make the market panic to like add to today's drop. So
Yeah.
if so without that knowledge, you really don't know what to do. My strategy is just to be mostly cash, take small snips on days like this, hopefully sell for like a quick recovery, make some more cash. You would have grown your cash pool a bit, and then make another move. And I mean, you do want to accumulate for the long run, but I do not know when the bottom is going to be in the current scenario. And I do know that we're sort of entering a time of great uncertainty. And when that uncertainty will end, and when we'll see a bottom, and when we'll see like a steady recovery, I can't say. It could be years.
Oh
And
my
I
God.
don't know at what point in the next few years we'll see the bottom.
Yeah. So we were buying like little bit of like JPQ in every dip, and it's like I mean basically it gives us like highest
Yeah.
dividend yield as well, right? So
Yes.
that's the reason we went through the JPQ. Like we invested like little amount of shares in each and every dip, but now it's almost like 150 to 200K down. So we were like, okay. So the best thing would be like
I would
to
not.
continue for now, right? To just
I
stay
mean,
in the market
definitely
for a
don't
little more time.
sell. Don't
Yeah.
sell at a loss. And you just sit on the capital and you wait for recovery. But I think when you're that bagged, you might have to wait for a while for recovery. I wouldn't sell. I mean, and again, the one thing you don't want to do is get all your capital tied up. So when like the really fabulous dip comes, you have no ability to invest more capital because you've got everything tied up in this one losing stock that's not going to recover for a while. Which is why I would never have bought like JEPQ steadily. Because again, and this is where like strategy really comes in. And with because yes, last year was a bull market. Everything was going up. With dividend ETFs, I like to pick them up in a really bear market, and we're getting to a bear market. So I want to pick them up when they're super duper low, and then ride the train up. And the same for like big, I mean, obviously time in the market wins. I have like I've been trimming my portfolio in anticipation of this drop. But there's lots in my portfolio I have not touched. I've got I sold my Amazon lots at 184 last year, and I sadly I didn't get too much of a profit. I didn't wait till like Amazon had peaked. I didn't know it was going to peak like that. But I sold my 180 Amazon lots, but I'm still keeping 150 Amazon lots. And honestly, at this point, it might hit 150s. But that's the thing. I'm looking at like what prices my shares are at and seeing, like, for example, I had like one Google lot at 135 and I sold it for a decentish profit. And I think today Google is down to, I think, the 150s. Let's see. Um, it's 149. And my lot was 138, and I think I sold it at about like the 170s. So I made some profit. But if I'd kept it, I would have like seen all my loss, all my profit like vanish. But I was sort of anticipating this and I sold it. I also had like an Apple lot at 170 that I sold for profit. And I think today Apple is down to 189. Still not down to 170, but sort of like hovering uncomfortably close. So I would want to like buy it, and I could buy Apple. I could start buying Apple again at this price, but I don't know if I want to wait till it's even lower. And this is the gamble you take. Like sometimes you go like, okay, I'm going to wait for the bigger dip, and the bigger dip never comes. And this was the lowest point that you missed. That's what often happens. And what do you know? So any more questions from people?
So how do you hi Jaya. So the question is, how do you anticipate that sometimes it might go so low that it'll never recover, kind of thing, and I don't know, declare bankruptcy or something, that kind of
You look
companies.
at the health of the company, right? And I mean, like in my stock trading group, we also look at like many penny stocks for day trading and penny stocks that are like rising on the news. So you really look at so if you buy like a penny stock and it falls, my philosophy is don't wait to see if it recovers, you cut it. Because you don't want to like hold on to some, and there are many stocks that go so low that they delist, but you really have to look at the health of the company, or to look at the type of the company, or to look at so many different factors to see if this is something that you should just hold forever or cut. And that is something that requires a lot of knowledge and like ability to look at. And for something like Apple, I mean, even if you're at a loss, you would hold it because it's going to recover. Same for and I mean and many of my swing trades are companies that are not are between companies like Apple, like these big giant established behemoths like Apple and Google and Meta and Nvidia. And and they're not your penny stocks either. They've graduated from like penny stock status and they're somewhere in the middle. So those are a lot of my swings. And obviously their fate is a bit more uncertain But still, you can like say, okay, even if you're holding them at a loss, you would continue to hold them because you think that they would recover. So any more questions?
So Jaya, what's your take on SoFi?
Oh, Sophie, I swung it from 7 to 16. I'm not getting, and I got out when it hit 16. I am not getting in until it's back in the sevens or the sixes.
Oh, okay.
So, yeah, that one's too, I mean, that one's at this weird uncertain. You really have to look at the technical chart in a matter of weeks. Like on a week, this thing, and then you look at like Bollingers and supports, and you look at, okay, what's the lowest it could fall to? I'm not getting into Sophie until it's nice and beaten down again. So there are many stocks that you get in when it's low, you sell it at the peak, and then you wait. You have to be patient. And when
Got it.
you're not
Thank you.
patient, and I mean, there are many times I have not been patient, then you pay for it.
Jaya,
But
I have a
bad holding.
question.
Yeah.
Have you traded Teledoc or have any knowledge on that stock?
No, I have not touched that one. And again, there's a process to evaluating a stock, and I sort of go over it in depth in the classes that I give and in this thing. That it's a pretty involved process. But I would say that the one quick cheat is to ask ChatGPT the right questions about the company, and you can get all the answers you need. And that's what I really do often to get like a quick idea of the company's health. But again, you have to ask ChatGPT the right questions.
Hi, Jaya.
Hello.
I have a question. Sorry, go ahead.
No, I just wanted to check, will NVDA come up anytime or it's just dipping and dipping?
I mean, again, no one has crystal balls. I would think that NVIDIA would recover to some degree. To what degree it will recover right now, I think NVIDIA is like sort of, I mean, everything's falling. Everything's falling, and you expect more of a fall. You don't know where the bottom will be. But after that, I sort of expect recovery. I would think that NVIDIA maybe has like a little bit of room more to dip before. And again, it really depends on geopolitical events, right? I mean, there's so many uncertainties. When the market recovers, NVIDIA will recover, most likely, is the answer.
Okay, thank you.
Hi, Jaya. This is Preeti. I wanted to ask a question regarding Sophie going back. So I had purchased a good quantity, maybe like around 1,000 shares, when it was like $7 something. And I've been holding at that price for quite some time, and then it went high up
It's
to
got to
16.
939.
Yeah, and
Oh gosh, yeah.
and the reason at the time when the friend who had recommended it to me was based on financials that it has potential to go in hundreds, right? So, they said just buy it and forget it for 5 years, right?
Yeah.
And I bought it at that time for $7. Now it went up to 16, and then it started going down to 12, so I got rid of half of it at 12, and now it's come back to almost the same price I purchased it at. So given the different theories, right? I mean, does it make sense overall when you talk about strategy, right? Does it make sense to like hold it for 3, 4, 5 years or whenever, right? When it will go into hundreds versus going back and forth, like, say it's now 7, in 6 months it's 15, you sell it, then again you get back into it. Like, so what is a better, like, what do you recommend?
I mean,
Um,
what I recommended is what I did. I looked at
uh-huh,
Sophie's history, and
uh-huh,
I looked at how it like rose and fell, and I was like, once it hit 16, I'm like, God damn, I'm offloading this. So I
right.
offloaded it, and I took
Uh-huh,
my profit. It was a nice profit. And
right.
then I am waiting for and that's what I do with a lot of these stocks. I mean, I've seen people who just like buy and hold on. Like one of the
Right.
stocks that we have traded, and I've traded like nicely. I swing traded it from 11 to 22, and I made a really nice profit. But then I made the mistake of buying back too early. It is Lunar. LUN.
Oh, Lunar.
Yeah.
I don't like that song. Yeah, I lost a lot of money in that one. Yeah.
So I mean, right now I've made money on it. And I've made a lot of money
Yeah.
like swing trading it.
Yeah.
But I've also like right now I'm also sitting on a big loss. And Lunar is something I'm not gonna cut. I'm gonna probably average down. I didn't buy a lot. When it was really high, I bought a bit. So it's easy for me to
Hmm.
average down.
Right.
But I am waiting for like the bottom to average down. But I mean, I've seen like I was like looking at people who owned the stock were commenting when it really went down. And there were people who were like, I bought it at 7 and then I didn't sell when it went to 24. And I'm like, God,
Yeah.
I don't be that person.
Okay. Got it.
Don't be that person. Because all of these stocks, I mean, especially when you look at the technicals chart, it's something I talk about a lot. And you look at the health, you go like these stocks sort of really fluctuate within a zone.
Right.
And you have to look at it in the day view, the week view, and the minute views. And I look at it in like many different time views to like see how to like play the stock. But generally, you should buy when they are at their lows in at least the week view, and then
Mm-hmm.
sell when they're in the highs of the week view. That's pretty
Mm-hmm.
much, yeah.
Okay. Okay.
Oh,
Thank you.
hi Jaya, can you hear me?
Yes.
Yeah, hi, this is Monica from Pittsburgh. So for somebody who might be just getting into the waters and everything and now looking at the market,
Mhm.
um, is it a good idea to start buying these things based off of obviously the research and the history and the specific companies that I'm interested in? Somebody who has not done a lot of stock investments earlier in life, is it a good time to buy, or based off of market trends, do you think should wait it out? Like, what's your recommendation on that for someone just starting out?
I mean, honestly, there's probably going to be more dips ahead, but there's also going to be recoveries maybe. And you can't, so you can keep waiting for the biggest dip, the biggest dip, the biggest dip. One day the biggest dip will come, and you will probably not take it because you're waiting for another big dip. So that is how it goes usually. So one way to play it is to buy a little at every big dip,
Okay.
especially if you don't want to like have elaborate strategies. I mean, in the long term, the stuff will go up. Whatever you buy at today's dip, might recover like 3 weeks later, and you might
Mhm.
not sell at that recovery and hope that it'll keep going up more. And then what will happen is it might dip to today's level or even below one day in the future. So you can play two different types of games. You can say, okay, I'm going to buy at a dip, sell at a recovery, buy at a dip, sell at a recovery, and then tax implications come in. Or you
Mhm.
can just say, I'm going to keep buying a little bit at each dip and not look at it for years. So you can decide which one you want to do.
Got it. Thank you.
Jaya, this is Usha here again. So I have Lunar averaged at 14.
Yeah.
So do you want me to buy this dip and average down a
I don't
little?
want you to do anything. You have to make your own decisions.
Yeah.
I'm buying the dips at 6, but that is me. I mean, that is my everyone. I mean, no one can tell you what to do on your
Right,
trading.
right. I mean, when I say what do you want me to do, doesn't mean I'm asking. Of course, it is
Yeah.
entirely.
Yeah. None
But
of this is
is it?
financial advice. It's just me
Yes,
telling
of
you all
course. I
what
get
I
that
want to,
completely,
what
Jaya.
I
I get
do.
that.
And
Mm.
I bought Lunar at this
Because
dip.
it was earlier, it was 14 when we were doing swing trading at the time of Jan. But I didn't sell that lunar thing after the moon didn't land properly. So that's when I should have sold it off, but I didn't. I missed that
I mean, that
day.
often happens. That I mean, and
Yeah.
you're often like caught bag holding, especially when you swing trade. That is the downside of swing trading. Especially if you we don't have the patience. And often that's the thing when a stock is rising, everyone is like endlessly optimistic about it. And when a stock is falling, everyone's endlessly pessimistic. And both approaches are obviously wrong.
Right. So yeah, so since
Mhm.
that time I missed, so that it's better I average down, right? Because it's not down to 6. So
I mean,
maybe.
again, you have to like decide what you need to do. I am averaging down, or I mean, like again, I'm also buying from like a brokerage where I can sell specific lots versus a
Right.
brokerage where where you're forced to average down. So
Right.
that also like makes a difference.
Got it. Yeah. Thank you, Jaya. Thank you.
Hi, Jia. I have a question.
Yeah.
You said you purchased SPDR in like August and then you got done with it in December. So if you could just share a bit of knowledge how you gathered that information to make
What
the
SPB?
right move. SPY.
Oh yeah, SPY. SPY. I mean, I knew this downturn was coming. I sort of knew it in my head because I've been following the political scene enough, and so I knew this was coming. So which I sold in anticipation of this happening, and it happened. So, yeah.
Yeah. I mean, there are a lot of us that are just stuck with, things that we've purchased and now we're stuck with
I mean,
those
it'll
high prices.
recover. I mean, like if you bought SPY at 600, it'll recover probably to 600, but you might have to wait a while.
You have to ride it out.
You have to. And I mean, you also, I mean, and then this is where it comes to like, do you have any more capital to left to buy? And if you don't, then you're just like writing it out, or you take the loss and you try to liberate and try to buy more, which is a more dangerous strategy, especially if you don't have that much to invest with. But if you have more capital, just use that capital wisely. And I mean, and again, I keep telling people this in my class, you do not try to buy at the top of the market. You buy something when it is beaten down.
Yeah, with Trump being in effect, we don't know 4 years down the road what
The end of the
chaos, what
day,
more
I mean, like
chaos.
nothing can be really like nothing is possible to predict here. And there's just so many different factors in play that this is one of I sort of look at this market as like walking a minefield. You can walk it, but you have to have knowledge to walk it and try to like make profit. And we've been profiting even in this market, even in the past few days. Like in the past 2, 3 days, I've made like hundreds of dollars in profit because of the volatility trading. But it's not for, I mean, you need to like know what you're doing.
You had recommended a stock called HIMS, HIMS.
Oh God, yeah. Him's, you took my class, right?
Yes.
Yeah, and you saw what happened to the Hims story I shared in my day trading. I don't think Hims is a really good company, honestly, but it is one of those things that tends, but it's also been running into trouble. So you really have to look at the business model. Hims was like a good buy last year.
Yeah.
Last year it was a really good buy. If you bought it around August, it's run up spectacularly since then. Now it's falling again. It could probably recover, but I it's one of those stocks which is also very volatile. So it jumps like $3, $4 in the space of a day. And I like those kind of stocks for like swing trading because it allows you to make big moves fast. I also like them for day trading, but you have to like be cautious in how much you invest.
There was just one last question. You had recommended APLD.
Yeah.
And I purchased it around the 6s and 7s, and now it's down to under 5.
Yeah, APLD again, that history is it depends on like their data, the catalyst that everyone's waiting for is them signing the lease for their data centers. So when that happens, if that happens, then APLD is like fate will like really, it will reverse really quickly and it's going to shoot up. But again, that's the thing with investing. You sort of do it hoping for a catalyst. And sometimes I mean, like when as we traded it, APLD one day shot to 12, and many of us didn't take profit at that point. So, and then you're left back holding. But that's the thing. I've swing traded APLD a lot, and I've banked quite a bit of profit, and I'm also sitting on quite a bit of loss. So I have to wait for it to recover. And with any investing, no one can give you anything with guarantees. To expect
Right.
guarantees is not something to go with. With it, with that trade, you like with APLD, the catalyst is that everyone is waiting on is signing of tenants for their Allendale plant, which is in North Dakota. Now, when that happens, the stock's going to go up. If it doesn't happen for like months, it's going to sink more. Though, I mean, right now, today's sinking is just in response to the market recovery. So then if it improves, if the market conditions let up and the market goes green, it's probably going to go back to the sixes and then wait for like further moves. That one has swung between 4 and 8 in the past few days. So it's wild action.
All right. Thank you, Jaya.
I have one question. When you're doing day trading, is there a percentage that you stick by to buy or sell stocks? Like if you have made a profit of 10%, then you just sell it no matter what. That's the general.
It depends on like how much I expect the stock to go up. It depends on the kind of news. It depends on how and what kind of there's so many things that we look at with day trading. You look at volumes gathering, you look at the amount of interest, you look at support and resistance lines. And generally, with day trading, a good strategy is to buy enough when it's low and let things go at different profit points. So you sell something at XYZ point, but you can hold a little back to see if it goes even crazier. So that is one strategy that people often employ.
Okay. Thank you.
Jaya, you say that this is the right time, and I agree this is the right time to buy. How do we identify, which are really beaten down stocks? For example, I didn't purchase much. I wish I had, but I purchased maybe, 2 shares of Facebook when it was 183, and I purchased maybe 10 shares of Root when it was $23, and now it's like over 110. So feels great, but like, how do we recognize such opportunities going forward?
I mean, first thing, no one can see the future. So it's sort of like it's a gamble you take. You say, okay, this company is going to recover and do spectacularly well. Sometimes it does, sometimes it doesn't. And
Right.
Facebook hadn't done well and it continued to like fall. So being cautious and just buying a small amount is probably the safer path than going crazy, if that's what you're asking me.
Yeah, I mean, I'm just thinking like I never expected Root to pay me so much, right? So it turned out to be because my friend had predicted back in the day, he told me that this company has potential to go up to $400. I don't know about that, but it gave me a pleasant gain compared to my
Yeah, I
other
mean,
stock.
honestly, I will say this, like the person's friend who talked about Sophie going up to like a crazy amount, people make
Yeah,
some crazy promises. And
yeah.
people make some crazy predictions with such confidence. Whenever I say anything, I'm like, I say it depends on so many things, and you have to be really cautious when you're talking about like the potential for anything going ballistic.
Mm-hmm.
And I do know that when stocks are beaten down like they are today,
Mm-hmm.
chances are when the market turns, they will recover. But I can never predict. I mean, looking at Sophie at 9.38 today, I'm like, I'm not going to make a prediction that it's going to 16 in like 5 months' time, or
Right.
it's going to go to 16 ever. I
Right.
might say that when the market recovers, it might go to 11. I don't know, which is
No, so I guess what I was trying to learn over here is that suppose if I'm looking at, I know we have not gone over the financials and fundamentals to really understand the details, and I'm trying to use ChatGPT just to educate myself, right? But
Mhm.
if I have to look at any potential companies, like to know, how do we know which company has good potential down the line? Obviously, we cannot predict, but maybe there are some parameters, for example, the PE ratio or anything else, or the trading
I mean,
amount,
it's also
or
like
collectively.
you
Mhm,
use your sense, you use common sense. You
mhm,
just look at everything together. You look at everything that's being said about a company and you make a
mhm.
gamble. At the end of the day, that is what it comes down to. You're making a gamble.
Of course, yeah.
So, I mean, you just got to look at all the factors and just use your instincts, use your common sense. That's all you can do.
Yeah, I know. Thank you.
Yeah. Okay. If no one has any more questions, we can wrap up.
There's questions in the chat, Jay.
Oh, there are. Well, I see this one Discord group on stocks that's paid or free. So there's like about a 3-day free trial that people can do that gives you just access to our discussion, but not to any of the education areas. And the Discord is at $15 a month after. And you can drop it at any point. You can like just take it for 1 month and then drop the next month if you want to. I think it is. Isn't JEPQ similar to QQQ with holdings? Probably. And JEPQ is very, very tech heavy, which is why it's like taking such a beating. Whereas JPI is much more diversified and it's more steady. I would like to take, Rashmi asked, I would like to take the day trading class. I'm on H4AD. So yeah, I mean, only the person, I mean, if you're married to someone with an H1, then the account would have to be in your spouse's name. Because I mean, it just doesn't. And with like an and generally with an H1, please consult an immigration lawyer, but you cannot be flagged as a pattern day trader. A pattern day trader is someone who is identified by their trading behavior as someone who's doing this full time, which means generally to be a pattern day trader, you need to have at least 25,000 in that account, which allows you to make like a unlimited number of moves. With like a smaller amount in your account, you can only make you can buy and sell only a few times, and you cannot buy and sell with unsettled cash. I hope that answers the question. I think I've covered all the questions in the chat. If there are any more, I can take them. Otherwise, I'm going to end this call. I guess there's no more then. Thank you all for attending. Someone just joined, Rashika. We're just wrapping up this meeting, but the recording will be available. Best of luck with your trading journey, everybody.